India's biggest property market, Mumbai, saw a record 1.1 lakh property registrations in 2021, surpassing the previous record set in 2018. This was the first time that annual registrations crossed the 1 lakh mark in India's financial capital. The milestone came even as the benefit of lower stamp duty was rolled back in April. Data from Anarock Property Consultants showed a clear picture of the sector's recovery. Housing sales across the top 7 cities rose 71% in 2021 to 236,530 units, indicating a strong consumer sentiment. The demand, however, still fell short of pre-COVID levels by 10%. Anarock has attributed the rise in housing sales to very low interest rates on home loans, pent-up demand, surge in aspiration for home ownership, cut in stamp duty by a few states, including Maharashtra, and discounts offered by builders. Led by the festive demand, the October to December quarter contributed nearly 39% to overall sales during the last year. But now, with the rise in Omicron cases, several states have imposed restrictions. Can this break the strong sales momentum that is continuing from last year? Anarock's Prashant Thakur is not anticipating a major disruption in the real estate sector because of a third wave. He explains why.
So the calendar year 2021 saw a very robust recovery in the residential real estate after a devastating 2020, where the sales and launches almost came to a standstill because of the first wave that we saw. And again we are seeing the talks of third wave and Omicron again resurfacing. And now everybody has a question that will it impact the growth cycle that this residential is seeing. So in my opinion, while the threat is there of this virus spreading, I feel the developers are better prepared this time. And then, compared to the first wave that we saw, the digital adoption that the sector has done is phenomenal. And if you look at the vaccination rate also in India, it's quite impressive. And the supply chain disruption that we saw during the first wave is also more or less sorted out. So in my opinion, while there will be some pockets of disturbance, I don't think this is going to have a major impact on the overall recovery that we are seeing.
And what are the prospects for commercial real estate and office space in particular? Thakur answers.
We are still seeing, the digital launch of various projects happening. There's this kind of, a robust launch pipeline that the developers have for this year. And I think all the buyers would like to cash in the low interest rate regime that is still prevailing, because we all know that with the inflationary pressure rising up, sooner or later the interest rates will start to move up. So in my opinion, that will also play on the minds of the buyers. And I think developers also are taking good care of avoiding any supply disruption. For example, they are taking good care of the labor on site. The compliance of all the COVID protocol is quite high. And in this background, I feel that the recovery is going to gain certain amount of momentum. Yes, we need to keep a guard up against this virus. But again, having said that, I don't see a major disruption happening in this sector right now.
Property prices may go up 5 to 10% in the short term, as developers may not be able to absorb further escalation in the prices of raw materials like steel and cement. Ratings agency CRISIL expects residential real estate to see a moderation in growth rate to 5 to 10% in FY23 in the top 6 cities, due to a high base and as interest rates start inching up. CRISIL expects the sales to rise 30 to 35% this fiscal, surpassing pre-COVID levels amid a strong consumer pull from favorable affordability and moderated capital values. A wave of new launches, led by Mumbai, Pune and Hyderabad, are lined up for this year. Many organized and smaller players have formed joint ventures and joint development agreements to take advantage of the new wave. Therefore, any disruption due to Omicron is likely to be a blip in the ongoing demand recovery.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.